Welcome to the Mortgage Mindset Podcast, where
We talk about all things mortgage, just, how to get a house, how to maintain a house, what goes into it, ideas on how to use your house, investment ideas.
this is our first podcast. And how do you think it went, the recording of the first podcast?
You know what? Like, I think whenever you're watching something that you've done is never what you think. Like, I didn't like my voice. I felt like I was talking really slow. It was a lot of likes.
That's probably because I talk really fast.
All that good stuff.
I'm gonna slow down.
And I'll try to speed up.
Okay, all right. And we'll do better in the next one. But enjoy the first podcast on, what did we talk about?
So we talked about the process of buying a house.
First few steps. So the first few steps are really important, and as much as we've all fallen in love with Zillow, they actually start with a mortgage professional. So enjoy the first episode of the Mortgage Mindset Podcast.
Yeah, I mean, I think some of the key things that people want to know when they're shopping or getting started with wanting to buy a house is like, what do I need to know? Like, how do I do this? So the formula is pretty easy, right? There's a few things that go into it, and I always say credit is important, right? That's something that we look at. Your income is another thing that we look at, and your assets or the money that you have saved. So those are the three main ingredients that go into trying to purchase a home, right? So, some people think like it's a big mystery or there's a lot that goes into it. I mean, there's things that we look at, but those are going to be the main three things that a person has to be ready for when they want to go and they want to buy a home. Yeah, I mean, I think so. We plan on talking about first time home buyers, right? Or just
Yeah.
in general,
think
how
the
things are
market-
going.
Yeah, I think how the market's going right now, especially what people who haven't bought a house before should be thinking about
Yeah.
when it comes to their finance.
I mean, I think you got probably a good feel for it. You've been looking for a house, yourself, right?
Yeah, I've saw the last 2 weeks we've been looking at how this, whether it's for short term rentals, for investment, obviously maybe even a little bit of house hacking where we live in it first, and
Yeah.
figure out what we're gonna do from there. So, uh, yeah, we've been looking at the market and where it is right now, and it's interesting because it seems like it's in a place where people have kind of woke up to reality and they realize they're not going to get even the comps from the last thing they sold in their neighborhood.
It's tough because it was, for a long time, people were getting so much money, like selling their houses, that to readjust how you think about it and what the expectations are. It's a tough thing for people to go through. It's kind of shocking as a person that's selling their house. I sold my house, I don't know, a year ago now, and we did pretty well. But if you didn't sell your house within that frenzy, then yeah, it's the expectations are different. It's a little different now.
So, from your side of the coin, as you look at it,
Mhm.
where do you think that comes from? Why is the market readjusting?
So I mean, a couple of reasons. Like, it was just really crazy for a while because of the inventory issue. In a lot of states, there just wasn't enough housing for the amount of people that were looking for housing. But the rates, right? The Fed has been trying to handle inflation, so the rates have gone up so much to where the amount of people that can qualify or the amount of people who still want to shop in this market has just gone down. So it's just more opportunity out there. Houses are sitting on the market for longer now, so it's just a better opportunity for folks that do want to go ahead and get in the house. And then later on, if they choose to, they can go ahead and refinance later on and get those rates, get a better rate. Something that's not going to be in the sixes or sevens or whatever they qualify for today.
Makes a lot of sense.
Mm.
Yeah. So I think when we look at like as a new home buyer myself, and as a first time home buyer,
Uh-huh.
when I'm looking at purchasing a house for myself and my wife, and I look at the fact that many people have priced it according to 6 months ago.
Yeah.
So if you were talking to a first time home buyer, which you are, you're talking to me,
Yeah.
and you were saying, well, yes, they priced it that way, but there's room. How do you get that point across that there's room to come down? Or does that point really translate yet to home sellers?
I mean, I think it depends on the seller, right? Like, sometimes reality has to smack you, like your house has to sit out there for a while. And then you realize, like, okay, people aren't going to pay what you really want. And then you got to come back to reality and lower the price. So sometimes when you're shopping, if you're looking at a site like realtor.com or Zillow or something like that, you'll see that the prices get cut sometimes 10, $20,000
Yeah.
because they're starting to realize. And what that does though is it allows you to come in, and when you're negotiating, you can say, "Hey, Mr. Seller, I want you to pay for my closing costs, or I want you to pay for a buy down so I can get a better rate." There's different things that you can use to negotiate and take advantage of where the market is today. So, yeah, the rates are higher, but you can kind of work with the sellers to maybe get some money off the price. Whereas a few months ago, you couldn't do that. Yeah.
So has the inventory adjusted, even though we see the interest rates adjust? Have the inventory technically adjusted? Are there more homes?
Yeah, so there's more homes on the market. They're staying on the market longer, whereas before it was like days and those things are just they're taking up, like people are snatching them off the market. So they're staying on a little bit longer. You got a little bit longer to shop. But I mean, in the Dallas area, right? So I mean, each market is going to be different, but in the Dallas Metroplex surrounding areas, it's still pretty hot because there's so much building and so much construction and different things coming to this area that people are still looking for houses. So I would say it's competitive, but not as hot as it was, 4 or 5 months ago.
Okay. I guess that's really good information for a person who is thinking about trying to purchase a new house and trying to shop for a new house and figuring out what they can negotiate.
Hmm.
So it makes a lot of sense. But what else should we talk about?
Yeah, I mean, I think some of the key things that people want to know when they're shopping or getting started with wanting to buy a house is like, what do I need to know? Like, how do I do this? So the formula is pretty easy, right? There's a few things that go into it, and I always say credit is important, right? That's something that we look at. Your income is another thing that we look at, and your assets or the money that you have saved. So those are the three main ingredients that go into trying to purchase a home, right? So, some people think like it's a big mystery or there's a lot that goes into it. I mean, there's things that we look at, but those are going to be the main three things that a person has to be ready for when they want to go and they want to buy a home.
Okay, that makes a lot of sense.
Mhm.
So now, walk us through a process that a person does identify a home because everybody, even to the pandemic, Zillow was like a new form of entertainment. So people were looking at houses. So they've
Right.
gotten used to looking at houses.
Uh-huh.
Some people have even gotten onto some of the home buying blogs and things, whether it's Bigger Pockets or something in the nature.
Yeah.
And a lot of people have learned how to analyze whether it's a rental property, investment, buy it whole, different strategies.
That's a skill, man. Like just being able to do that, know if the house is if it's worth it, you're gonna make money on it. So yeah, that's a big time skill to have.
Yeah. And all of those are skills I think people can build in a silo. So they can be at home, they can figure that out.
Yeah.
But they want to translate that to the real world. So what's step one?
Yeah, I mean, first step is you got to figure out how much you can really qualify for, right? I mean, before you start falling in love with houses and getting out there and looking at stuff, you want to know how much you really have in your pocket, how much you really can spend. So I'm a mortgage person, so you got to talk to somebody like me.
Call you. Yeah.
Yeah, exactly.
All right. We call Dekovan.
And find out how much you can qualify for. So what we'll do is we'll go through the numbers, we'll talk about your credit, how much money you make, your income, how much you have saved.
Okay.
And then based on what we come up with, right, and how much you really want to spend, then we put together a pre-approval letter as long as you do pre-qualify, as long as we can qualify you.
Okay.
Then we'll put together a letter, and then you can share that with your realtor, and you're off to the races, really, with looking for houses.
Okay. Well, that sounds good. Now, do you help a person to understand what their payments might look like, or might that change as they approach each house?
So of course, like we have just whenever we're going through it, a base idea of what your payment's going to look like. But as we give you a range, so when you're out there looking for houses, not every house is going to be exactly like, sometimes you may find something that's right on the number, or something that may be even a little bit higher than what you initially projected that you wanted to be at. So, we kind of play it by ear. Like if a person is the type of personality where they want to look at the numbers on each house, then we can show them that. And if they just want to have a range and go out there and shop, then we can do it that way too. But we definitely want you to know what you're getting into as you go, so you don't get a sticker shock, or you're way outside of your budget on what you wanted to spend.
That makes a lot of sense. So when it comes to a person's step two, so a person that comes to you, or even step, let's call it 1.5.
Yeah.
So they come to you and you're going to ask them 4 things in order to pre-qualify. So in order to make that transaction or that conversation easier, what should a person have ready when they want a pre-approval letter?
Yeah. So the first thing is, right, we're going to look at your credit. So, some people will have their credit locked, right? It's kind of an important thing these days. You don't want people getting into your credit, hacking you and things like that. So we need to access your credit. So you want to make sure if you have any locks or blocks on there that those are removed, right? So we can go ahead and look at your credit report. And then after that, feel free to put all that stuff back on there so you can stay safe. So that's the first thing. And then we're going to talk about your income. So it's good to have your pay stubs. We want to see 30 days of pay stubs. So if a person's paid twice a month, then we want to see 2 pay stubs, right? We'll want to see your W-2s for the last couple of years. Okay. So if you can get those together, sometimes you got to go into your payroll sites or whatever to pull those. And then we'll want to see your bank statements for the last 2 months. So with all of that, like those are the documents that we need, and we go through those. We'll do an application. The application is pretty easy for all the companies. Now everything's done online. You just go online. It'll be some questions that you'll fill out. Okay. And then once that's done, then your loan officer will go through the application with you. It's actually pretty painless, right? The application part of it. Yeah. So, sometimes a person's doing this for the first time. They're really afraid of that. Like, what could they want to know? But it's going to be your basic information, name, date of birth, social, address. They're going to ask about your work history, how much you have in your account, who you bank with. And then it's a few questions at the end of the application that you answer. So usually the application process will take you about 15 minutes to go through filling it out. It's usually questions that you'll know the answer to. And then you just work on gathering those documents. So
okay. And then that's what you would suggest that people do before they go and begin to look for homes.
Yeah, it's a really important step to make sure that you qualify for whatever it is that you're looking for. Otherwise, you could be out there shopping for something that's well above what you can qualify for. And once it's really hard. It's almost like going to shop for a car. Once you found that car that you love, it's kind of hard for somebody to take you back down to go look at a Ford Focus or something like that. It's just nothing wrong with Ford Focus.
Feel free to sponsor us. No, we're not turning down any money. No, but I understand completely. So I think that's something that a lot of people, probably you run into a lot of people who have skipped that step. Mm-hmm. And many maybe are fortunate that they fell in love with a house that was reasonable. Right. But I'm assuming that some don't. Some really want the McMansion, and it's just not going to happen.
Yeah. So, it's kind of hard. It's almost like coming back to reality. That's not going to work. So it's better to just start it out the right way and figure out how much you really do qualify for, and then shop within that budget.
Okay.
Yeah.
And then the shopping process, is that something that when do they come back to the mortgage professional? So I'm assuming that people are going to, as we talked about earlier, this pandemic, the time that people spent isolated, they picked up every device and they learned how all Zillow works, and right. People are, they're evaluating properties. They've got some skills under their belt that some hard skills that they've learned at home, but the soft skills have to come out. They got to meet with a realtor. They got to put in offers and things. So when in their process do they call you again, or who calls you? Does a realtor call you?
Yeah. So typically the way it works is we'll go ahead and go through the pre-qualification, right? We'll generate a pre-approval letter. The person goes out and shops. And sometimes it takes like a little extra push to help you win the deal, right? So the agent may call the loan officer and say like, hey, can you call this listing agent or the seller and just tell them that, the buyer is in really good shape and they are able to qualify for this. So at that point, they'll re-engage with the loan officer when they have a house that they're putting in an offer on. Okay. And that's something that we do. We call the listing agent, call the seller and let them know the position that the buyer is in. And then hopefully at that point they win that offer, and then we re-engage with the client. And now we're going back through, we're recollecting any documents that may have gotten old that we need to update. And then from there, we're submitting their loan to an underwriter to review it.
Okay. So this is something that I think is important to not glaze over, because from a first-time homebuyer's standpoint, I did know about the pre-qualification, but I was unaware that you would be able to get involved on the offer side of things. I thought after I got the offer accepted, then I come back to you. So now is that sort of a carte blanche treatment that you give people, or is that something that is quite common in the industry to get involved in making an offer?
Well, I can't really speak for everyone, but that's something that my team definitely does because we want to help to give that added push. You can think about like if you were selling your house and then you get a lender calling you and they're telling you about, the person that's qualifying, wanting to buy your house and giving some extra assurance, then that's the big thing that you want to have. Like if you're in the process of selling your house, you're going to take your house off the market. You're trusting that this person really does qualify. And if you have the lender or the bank calling you saying like, hey, I'm letting you know that I've reviewed this person. They're in great shape. They're going to be able to take this from start to finish and really complete the sale or the purchase of your home. That makes you feel a little bit more comfortable and willing to go ahead and move forward with that person's offer. So it's a good step, something that my team does to kind of help with the sale and helping that buyer to be able to get into the home.
That's good to know. So it's something that we want to keep in mind is that not all mortgage professionals are created equal. So you want somebody who's willing to take that extra step for you.
Yeah,
So
yeah.
that sounds good. Sounds good. So I know earlier we were talking a little bit about the market and where things are. So maybe we can just kind of recap some of that. Just talking about how mortgage rates have seemed to scare a lot of people out of the market.
Mm-hmm.
So most people I talk to say, well, I can never buy a house now because it would just be too expensive.
Mm-hmm.
So is that true for everybody, or what's the situation?
I mean, not really. If your finances allow you to do it, it's almost like weather in the storm, right? Because the market has always been cyclical. We've seen this many times where the rates go up, they come down. Now is going to be a time where it's not as competitive because the rates are higher than they have been over the last couple of years. But that allows a lot more people to get in and purchase the home that they want because they don't have the same amount of competition. And then when the rates do come down, hopefully within maybe the next, 12 months, then they will already have that home and they'll be able to refinance it and get a lower rate and lower their payment. So what we say is, marry the house, date the rate.
Okay.
Yeah, and that's the mortgage industry saying.
Oh, date the rate. So, but I guess you have more time to find the house you want to marry.
Right. Yes, that's true.
Not everybody's in the market. So people will say that now's not a good time to be in market. They're wrong because everybody's listening to them and they're not in the market. So
Yep,
they're wrong because everybody thinks they're right. So now's a good time to find the house that you want to marry, find the house you want to have, your forever home maybe, or just the starter home.
Yeah, exactly.
And
exactly.
well, Dekovan, that was really helpful to me. I've already taken action on some of the first few steps and moving forward. So really appreciate taking the time to help gather a better understanding of how to get started with purchasing a home, whether it's for ourselves or if we want to use it as an investment vehicle. So really appreciate it. Anything that you want to share with people?
Yeah, so we want to make sure you know how to reach us for any questions that you do have, if we can help you out, if you're looking to go ahead and get started. So I'm Dekovan Wesley with the Mortgage Minds, and please, you can, of course, below, always like and subscribe and find us and tune in so we can give you more information.
All right, well, I'm Kendall Williams. This is Dekovan Wesley for the Mortgage Mindset Podcast, and we will see you guys later.